The team at Technology 4 Hotels knows how busy you are, so we've created this concise briefing to keep you up to date on key happenings in the hotel industry. Let's dive in. So our goal today is really to cut through the noise, get you those essential updates on, global expansion, key investments, and leadership changes shaping the hotel world this week. We've got quite a bit to cover.
We do. And what's really striking is the speed, the velocity of it all. It's not just growth. It's very strategic acceleration.
Strategic how?
Well, we're not just seeing random expansion. It's focused especially on high-yield segments like luxury and lifestyle. And a lot of that focus geographically is on the Asia-Pacific region, APAC. That's where a ton of capital seems to be heading.
Okay, let's start with scale then. Hilton hitting 9,000 hotels worldwide. That's a massive number.
Huge. But it's the pace that's really something. Nearly 3 openings per day on average over the past year.
3 a day. That's staggering velocity.
It really shows market confidence. And look at their pipeline still, over 3,600 properties under development. It's like a machine.
And the Milestone property, that was in the U.S.
Yeah, the Signia by Hilton Atiara Resort and Spa in Texas shows strength in the U.S. resort market, definitely.
Yeah.
But the real strategic story might be in their luxury and lifestyle push.
Right, you mentioned that focus. They now have over 1,000 luxury and lifestyle hotels.
Correct. And the projection for APAC is significant planning for at least 50% growth in that specific portfolio there. They already have over 160 operating.
Okay, 50% growth in luxury lifestyle in APAC. Why such an aggressive target? Seems ambitious. What are the challenges there?
Well, it's not just about adding rooms. It's about adding high-yield rooms. Luxury and lifestyle properties just bring in much higher ADR, average daily rate, and better RevPAR, revenue per available room.
So better margins.
Exactly. But achieving that growth isn't cheap. It demands big investments, specialized training, getting the tech right locally. The CapEx is way higher than for, say, a select service brand.
But the potential return justifies it, because high-end guests want those unique experiences.
That's the calculation. They're betting on that demand for unique, experience-driven stays. You see it in the upcoming openings.
Like which ones?
Well, names like the Waldorf Astoria Shanghai Canton coming up, Nomad Singapore planned for 2026, Waldorf Astoria Bali in 2027. It's a move towards bespoke properties, not just scaling formulas.
That makes sense. Like the Loris in Singapore, the luxury collection one on Sentosa.
Precisely. Singapore's first luxury collection property.
Yeah.
183 suites. And note the design blending colonial style with tropical luxury. But also, importantly, the focus on sustainability.
How so?
Things like smart energy management using eco-conscious materials. It shows that even, or maybe especially, luxury travelers are now demanding real sustainability efforts. It's becoming table stakes.
And we're also seeing the residential angle creep in.
Yes, another luxury yield play. The Waldorf Astoria Residences in Tokyo Nihonbashi, launching 2027. That's the brand's first residential venture in APAC. The activity is just nonstop. Lime Resort Bohol 2, 138 keys, end of 2025.
Okay, so that's the very top end. But what about growth tied more closely to infrastructure? Let's pivot to management deals and regional integration. Australia seems busy.
Definitely. Look at the Trilogy Hotels deal with Serene Capital for the Mercure Penrith.
Okay, what's the story there?
It's a 222-room hotel right next to the Panthers Leagues Club, sure. But the real value driver is its location relative to the upcoming Western Sydney International Airport and the Convention Center.
Ah, infrastructure play.
Exactly. Trilogy, with Accor providing the Mercure brand, is basically betting on the growth spurred by that massive government investment in the region's infrastructure. It's about planting a flag early.
Smart positioning. Now, speaking of calculated growth, Ascot seems laser-focused on Citadines, their upper mid-scale serviced residences.
They really are doubling down. You've got over 200 already, and they're planning another 20 by the end of 2026.
Why this segment specifically when luxury is so hot?
It's a different model. Offers more, let's say, resilience.
Yeah.
Serviced residences, especially upper mid-scale, tend to have operational efficiencies. Less volatile demand with long-stay guests compared to transient hotels.
More predictable revenue streams.
Generally, yes. Ascot is leveraging the reliable Citadines brand to push into key spots. Hobart in Australia, Phnom Penh in Cambodia, 2 in China, and significantly, a new big one in Vietnam.
We're in Vietnam.
Citadines Riverside Canton. 244 keys, opening 2028 right in the Mekong Delta. A critical region.
Southeast Asia is definitely a hot spot. Pan-Pacific is active there, too.
Very. They just launched the Park Royal Service Suites in Hanoi, 126 keys. And that's just part of a bigger plan.
Which is?
8 new properties slated across Vietnam, Cambodia, Thailand, Indonesia, and the Philippines, all within the next 2 years.
Wow. So for investors looking at midterm returns.
Southeast Asia's structural growth makes that serviced apartment segment look pretty attractive, pretty essential even.
Okay, from management deals to actually changing the assets themselves. Asset repositioning, big
Right.
one in Sydney.
Yeah, the Novotel Sydney Brighton Beach becoming the Brighton Hotel Sydney part of the MGallery collection. And it's more than just a rebrand.
How so? Elevating the positioning.
Absolutely.
Right.
Moving from dependable mid-scale Novotel to boutique, experience-led MGallery. It's a clear play to capture higher value corporate and especially events business.
Ah, the expanded ballroom is key then.
Totally. That 600-seat Brighton ballroom is proof. They're leveraging existing assets like the location and views, but upgrading significantly to attract those high-margin corporate conferences that might have bypassed the Novotel. It's aiming for that MGallery premium.
Is there a risk, though? Can that location really command that premium now?
Well, they're mitigating the risk with the scale of the investment. It's not just a cosmetic change. They've added tangible high-yield assets like the ballroom, enhanced amenities. It's a full value proposition shift, aiming for specific corporate demand in that coastal area.
Got it. Let's shift gears to integrated resorts. Darwin Airport Resorts is getting a major upgrade.
A huge one, $41 million, aiming to be Australia's first proper airport resort.
What does that integration actually look like?
Physically linking the Novotel, Mercure, and Ibis around a central lagoon pool, adding higher-end options like Rapid Creek Villas and executive suites, new shared dining too.
Huh.
But the really interesting bit, strategically,
Yes.
is the Indigenous Training Academy component. That's not just CSR. It weaves local culture into the experience, a differentiator.
Hmm.
But crucially, it addresses the huge staffing challenges you get in remote markets like Darwin. Smart operational move.
Very smart. And the wellness trend continues driving deals too.
Definitely. Travel and Leisure Co., picking up the historic Hotel Bellinzona in Victoria's Hepburn Springs region.
Australia's main wellness hub, right?
Exactly. They're rebranding it. Club Wyndham Bellinzona Hepburn Springs, Dalesford. It slots a dedicated high-end wellness asset straight into their Club Wyndham South Pacific vacation ownership portfolio, their 68th resort.
So converting desirable independent hotels into their timeshare or vacation club system.
That seems to be the consistent strategy, yeah. Turning unique assets into reliable fee-generating products for their members.
Okay. And looking further down the luxury pipeline.
Still plenty happening. Aman Singapore is on the books for 2028, part of that big Skywaters Tower. That'll be Aman's 4th urban resort.
Again, Radisson Collection.
Expanding in Indonesia, Atiara Ubud Bali, a Radisson Collection resort, scheduled for 2027. So yeah, the high-end development keeps rolling.
It's easy to get caught up in all these openings and deals. Let's pull back for some context. How does the hotel sector stack up against the wider travel market? Macro view.
Good question. Overall, the hotel sector forecast looks solid. Statista predicts global hotel revenue around $455 billion this year. Still the leader in travel segments.
Really? I sense a but.
The competition is heating up intensely, especially from other leisure segments making strong comebacks.
You mean cruises and package holidays?
Exactly. Cruises especially. They almost vanished in 2021, right? Now they're roaring back. Expected to top $45 billion globally in 2025.
That's a serious rebound, driven by North America mostly.
Primarily, yeah. And the appeal is that integrated package accommodation, food, activities, often one price, it's simple for the consumer. Package holidays, especially popular in Europe and Asia, are seeing similar rapid growth for the same reason. Perceived value and convenience.
So if you're a hotel leader, how do you compete tactically against that integrated convenience for the leisure dollar?
You can't really compete head-to-head on the all-in-one simplicity of a cruise. Hotels have to play a different game. It's about customization, digging deep into local experiences, offering flexibility.
Which ties back to the luxury and lifestyle focus.
Precisely. That's why those brands are getting so much investment. They aim to offer curated, authentic local experiences that a big cruise ship or a standard package tour just can't replicate. Using tech to personalize this stay helps justify the, potentially higher overall cost compared to a package.
So the threat is, if you don't offer something unique,
you risk losing that valuable leisure traveler to a simpler bundled option. It really raises the stakes on delivering a distinctive guest experience.
Which brings us neatly to our final segment, Stars in Motion, Executive Appointments. Are we seeing moves that reflect these strategic pressures?
Absolutely. Look at Mandarin Oriental Group. They've made some very deliberate hires as part of their big transformation strategy.
Such as?
Well, Raphael Bitt coming in as CIO, Chief Information Officer. His focus, technology, digital AI, that signals the transformation is deep, systemic, tech-driven.
Not just cosmetic changes.
Not at all. And look at the other key hires. Christian Gradnitzer for F&B, Conde Camara leading sustainability, a huge focus now, and Emlyn Brown for spa, leisure, and wellness.
So shoring up key revenue areas and brand pillars like sustainability and wellness.
Exactly. These aren't just figurehead roles. They're driving strategy, culture, and where the money gets spent, especially vital for that luxury target audience.
We also saw significant appointments at Soneva Group, effective next year.
Yes. Joanna Flint is Chief Commercial Officer. That signals a real push on the commercial front, market share growth. Plus Chris Whitehouse is CFO and Abhishek Sharma promoted to COO. Strong leadership team there.
And elsewhere. Any other notable moves?
Quite a few, reflecting that commercial and tech sharpness. Julian Racy is now Corporate Director of Field Technology Services at Hyatt. Marcus C. is Director of Commercial for Salter Brothers at IHG. And Karen Priest, a former Tourism Commissioner, is now Director of Commercial at Pan Pacific Perth.
And Millennium and NZ.
Hani Daher, appointed VP Operations for Millennium Hotels and Resorts, New Zealand. So yeah, across the board, you see this emphasis on operational strength, tech reliability, and really aggressive commercial strategies.
So if we tie all these threads together, the push for luxury yield, the strategic infrastructure plays, these high-level executive appointments focused on tech and commercial results, what's the biggest challenge ahead?
For me, it comes down to execution. It's one thing to announce luxury growth or tech integration. It's another to actually scale bespoke service without losing quality or integrate complex new tech smoothly without disrupting the guest experience.
So managing that growth effectively.
That's it. Operational execution, especially in delivering that personalized, high-touch experience consistently, even as you expand. That feels like the defining challenge for the next few years.
That wraps up this week's 5-Star Weekly Briefing. Thanks for tuning in and staying informed with the latest in the hotel industry. Don't forget to check out our 5-Star Conversations podcast, where Brendon Granger from Technology Hotels sits down with the industry's most influential leaders to uncover their journeys, insights, and the future of hospitality. It's a must-listen for anyone passionate about elevating their guest experience and driving innovation in the hotel world. Until next time, stay well and stay ahead. See you next week.